Hey, moving friends, it's Carlton. I just wanted to give you an update on our conversation from a couple of weeks ago about the Fed pausing rates, which is helping us in the mortgage rate environment. And Greg Richardson again came out with another comment about the mortgage market. And so I'm going to quote right now, we are in what he calls a nirvana for the mortgage market. We're seeing low mortgage rates, no volatility, moderate growth, and no inflation. In addition, this week, Freddie Mac reported that the 30-year fixed rates fell again to a one-year low. Stocks continue to slow climb northward. The number of people filing for unemployment is fairly steady, and inflation is still right around 2% sweet spot. With the rate hikes on hold, they're only expecting one this year. The next big issue for the Fed is to try to balance their $4 trillion balance sheet. The Fed started growing its balance sheet after the financial crisis. Stocks and bonds responded from 2009 to 2012. Fed slowly increased its balance sheet, and stocks were moving higher as interest rates moved lower. In late 2012, the balance sheet expansion grew dramatically. The balance sheet mostly comprises of treasuries and mortgage-backed bonds. So far, the Fed has reduced about $400 billion, and after the release of the minutes, analysts believe that the announcement at the March meeting that the runoff will stop at the end of the third quarter. And after that, it's expected the reserves will be slowly reduced. The recent report on the U.S. jobless claims does hold a slight indication that the labor market is also cooling off. The number of Americans filing for unemployment benefits dropped, but the 4-week average is up over a one-year high. That suggests a more moderate pace of job growth, mirroring what we're seeing in overall economic growth. A couple of things to look for is the U.S. and China trade talks. There's a March 1 deadline, so watch out for that. See how that's going to affect our markets here soon. And finally, just wanted to point out, we had a slow January. We have heavy home inventory. Exciting news for potential home buyers right now is that inventory is at a 10-year high over 54 metro areas, according to the latest national housing report from RE/MAX. The report also shows that January was the fourth consecutive month for inventory growth. Obviously, the other side of the situation is rough for those selling homes. It does say here that existing home sales data is released on Thursdays backs up the inventory data. NAR reports that U.S. home sales fell to a 3-year low. Home prices are still going up, but definitely continue to slow down their pace. At January's sales pace, the existing inventory would be exhausted in just under 4 months. That's better than we were in December, but it's a 6 to 7 month supply is viewed as a healthy balance. So we have a little ways to go. As we inch closer to spring buying season, we're already seeing mortgage applications pick up. Data from Mortgage Bankers Association shows that after four straight weeks of decline, applications are up by 2% over week, and up 2.5% from a year ago. So if you have any questions and would like to get some help on getting a home purchase, feel free to give me a call. My contact information is listed here. Comment below on any of the information I provided, or reach out to me just to follow up on what we discussed. Thanks a lot. Have a great day, and hope you make it a great one. Thanks.